Good day. I'm Martin Gago with Market Radius Research. It's Thursday, March the 31st. Today, we have CEO David Kratochvil of BQE Water joining us. BQE is a service provider specializing in the treatment and management of water for the metals, mining, smelting, and refining industry. I've got them on today because I'm very interested in the water space, which has a very long and strong long-term systemic growth opportunities. This story has been around quite a long time and has taken a while to find its footing. I met David several years ago as he was in the process of transforming and creating the current model for the company. I've been impressed with his strategy and, more importantly, his execution to get it done. I'm looking forward to better understanding the current model and the drivers for growth over the coming years. But please remember, this is neither a recommendation or investment advice. We're here to learn about the company. David, thanks a lot for joining us, and please tell us about BQE.
Great, thank you, Martin, and welcome everybody, and thank you for joining us today. Yeah, I'll take you through the slide deck that talks about basically BQE Water and our strategy of growing the company and the business overall through recurring revenue from water in the mining, metal smelting, refining space. So as Martin introduced us, we're specialists in water management and treatment in the mining and metallurgical processing sectors. And our mission is to ensure environmentally responsible extraction of metals with special focus on producing clean water. That's really our product. Our product is clean water. It's not a piece of equipment. It's not a report. It's actual clean water that's either reused or discharged into the environment. And of course, in the process of doing that, we're trying to minimize risks and liabilities for our clients and help them achieve their ESG goals. Our business is driven by technological innovation, and you'll hear about that during the presentation, specific areas of intellectual property that we have in key areas of the space. We have customer-centric business model. Again, I'll explain what that means. It's actually quite unique in our space, although we see others following in our footsteps now. And what sets us really apart from many others in the space is that we look at the water issues holistically. We look at the entire life cycle of projects, and again, you'll see what that means and how that impacts what we do. Why should you consider investing in BQE Water? I would start with the unique intellectual property that really sets us apart. That's a significant value there for our business. And we have that IP in several areas that are key to the mining sector moving forward, including selenium, sulfate control, cyanide recycle and destruction, and tailings management. We have a proven business model that we know it works and maximizes the value capture from the space. So we actually tailored the business model to the core competencies of the company and maximizing the value that we can capture from the space. We have a very strong pipeline of projects that are sole sourced for the majority of them, and the majority of them directly lead to recurring revenue from water. We have clients that are leading top metal producers, including Glencore, Jiangxi Copper, Kinross Gold, Freeport, etc., Codelco. And we have very strong ESG credentials. So for those of you who are interested in following companies or investing in companies that actually have ESG credentials, I think BQE fits very well because our entire mission is to help an industry that's going to be key to decarbonization of global economy, to carry out business in a socially responsible and environmentally responsible way. And finally, we have growing positive cash flow with no debt, and 60% of our revenue is recurring and growing. For those of you who are not familiar with the water space in mining, the water industry is very large, and the mining part of the water business is actually quite small within that gigantic water space that's dominated by municipal treatment, seawater desalination, sewage treatment, etc. So the mining space is really sitting aside. So for those of you who are not familiar with water in mining, just to a few slides to highlight the key features of that sector. I would start with the fact that 90% plus of mineral processing and mining metal extraction takes place in water. So you need water to produce metals to begin with. Also, in the process of extracting metals, the contact between the minerals and water creates contamination. So water becomes contaminated, and that water needs to be treated to now very strict regulations. It, in many cases, can no longer be stored. So it used to be that water would be just stored in a tailings dam, and mines would basically close down with a massive inventory of contaminated water stored in dams for a very long time. Now governments really insist that that water is a liability that can no longer be stored and has to be treated during the life of mine.
David,
and yes?
Sorry to interrupt. Obviously, regulatory environment has changed a lot over the last many years, but the existing tailings dams with the contaminated water, are governments forcing those prior miners to go back and like retroactively sort of clean them? And maybe you'll get this into your opportunities as well, or just saying, hey, we don't want this liability, we'll do it on our own kind of balance sheet from the government? Are those old tailing ponds being dealt with?
It really depends on the jurisdiction, and I would say that the sense of the liability really hits the new projects going through permitting. And one of the things that in our business model I'll be talking about is about BQE Water positioning ourselves in projects very early during the very early stages of project definition and permitting. And so I think Martin, it mostly applies to the new projects. It used to be that projects would apply for a permit with the notion of zero liquid discharge. And I think that those zero liquid discharge projects are that number of those projects is being reduced dramatically. Obviously, the storage of water that's contaminated is also, you have to put it in perspective of risks always. And so there are environments like most of Canadian operations are in positive water balance situations where they have excess water and they actually have to discharge. So they would be accumulating water in the dam, and they have to discharge. But there are operations, even in Canada, that are actually in climates that, sometimes they don't have enough water. And in those situations, again, the risk assessment will tell you whether the storage, be it temporary in the dam, is acceptable. And finally, I guess here I'm talking about the social and social aspect. It can be understated that water is absolutely critical in gaining social acceptability of mining projects. So even if you can tick boxes on environmental regulations, the legal aspects of compliance, social acceptability is what we see driving the sector more and more towards going beyond what the regulations prescribe. And certainly issues such as minimization of waste, long-term no impacts, so not immediate lethal toxicity, but also chronic toxicity over long term, and local communities engagement, all of those are really important part of our mine water business. Again, this is just to share with you the way that we look at the overall market in segments. When people think about mining, they typically think about the middle row of operating mines. It's on everybody's mind. We can start there. The key points here is that the typical mine life of a base metal mine these days is about 20 years, and for precious metals mine, about 10 years. So when we're talking about cleaning water and running these water treatment plants, we're not talking about, 1 or 2 seasons. This is several decades, right? And in terms of this space, just to, I guess, put it out in perspective, Canada and the US account for about 25% of the current mines, operating mines worldwide. So there is probably on the order of 5,000, 6,000 mines globally in the operations phase. Now, all of these mines come to an end of a mine life, and it's very unlikely that at the time when they stop producing, they can basically cut off the contact between water and sources of contamination. What that means is that the contamination of water continues beyond the operating life of mine and into closure. So these mines go into closure and post-closure, sometimes several decades. And these closed mines, therefore, are also a business opportunity for us. And for the existing ones that are operating, when they go into closure, we'll follow those projects as well. Now, you can imagine that there's a lot more closed mines than operating mines. And I'm just assuming that there's approximately 10 times more of those. And then finally, up front, before you have an operating mine, you have to go through stages of development. And you can imagine that, for every one mine that makes it into operation, there are many mining projects that somewhere along the way, be it feasibility, economics, permitting, get derailed. But nevertheless, are projects that we get involved in. And we get involved in them because in the early stages, despite the fact that there is no contamination yet, they still need someone like BQE Water with our expertise to guide them through the permitting process, help them find the right solution that they can build into their feasibility study and price it correctly. And I'm giving it a multiplier of 4 times, of mines in development compared to producing mines. All of these factors may be off, but to give you sort of a rough estimate that overall total number of projects out there is on the order of tens of thousands in the mining space. So this kind of summarizes the mining space water opportunity.
And to summarize that even further, what you're saying is there's a very large opportunity out there. That's the gist of this, right?
Yes, yes. I'm also trying to put it in perspective of our market share and, people concerned about, well, is the market big enough for you, or what kind of role do you play within that sector? And we'll get to that in a few slides. So now I'm moving on to the business model and how we actually extract value from this space. So as Martin introduced us, we're a service provider, and the service really comes in different shapes and forms. But fundamentally, we have 3 buckets. We have consulting services that focus on identifying the right solution. So as part of that, we would do engineering studies for feasibility studies. We do lab testing. We have our in-house lab, piloting facilities to demonstrate treatment for the regulatory agencies, assist with permitting, et cetera, et cetera. So that's kind of identifying the right solutions. Then we have a bucket of operation services that's basically related to implementing these solutions. And this bucket is really important because that's the bucket where we generate the recurring revenue. So the consulting services are consulting services. They are non-recurring revenue. And they may take, number of years for each project to get it to a stage where, a mine operator actually implements treatment. Once they do, then the whole thing shifts into the blue bucket of operations, where we actually have operators running the water treatment plant, producing clean water, and getting paid for that clean water in the form of our tolling fees for recurring revenue. And then finally, we have the bucket of what I call technical innovation. That's kind of spanning and overlapping with the consulting and operations. And this red bucket is really the beating heart of our business, where we generate the long-term value through intellectual property. And why it's overlapping the operations and consulting? Well, you can imagine that operations are a never-ending source of ideas, how to improve our designs, new ideas about even new designs and new concepts. So unlike vendors who sell a piece of equipment but actually never know what the performance is, we're in charge of the performance of the treatment processes. We know how to do it better and innovate through that. So that's kind of the sustaining innovation coming from operations that keeps us ahead of competition. And the consulting services really provide us with an opportunity to try completely new things. So when mining companies identify that sometime in the future they will need a certain type of treatment, or they will have certain type of contamination, and they don't know what they will be able to do about that. A great example of that was selenium with us a number of years ago. We were approached by companies that really wanted to explore potential treatment systems, that they were very open to new things that did not exist on the market. And this gives us kind of the opportunity to play in the not in the sustaining innovation, but it really the step change kind of innovation, that disruptive innovation, if you will. And so that encompasses the lab testing, pilot demonstration, and those types of services. So that's the red bucket.
Sorry,
examples of the yeah.
Could you go back one slide? I want to ask some questions on this one a bit. On the consulting side, do you do one-off sort of consulting projects for firms, or is it all consulting work where the ambition is that you do the preliminary work where it'll eventually turn into operations business, and that where it's sort of the beginning work of long-term work, or someone just says, hey, we've got a one-off project here for $100,000, you do that, and then you kind of never see them again?
Well, we do both, Martin, and we do both for a number of reasons. I mean, I would say that in our pipeline of projects, probably 2/3 or 3/4 are the ones where we have visibility of the project moving into the operations phase. But we also do the one-offs. We do them for that are really good clients and that come to us with one-off, and we absolutely value that opportunity. Also, we do that for business development and marketing. The industry is relatively small, and everybody knows everybody in the industry, and people move around. And so if you do a really good job on a consulting job in one place, it may open up future new opportunities. So we do both, but the vast majority of what we have in our pipeline has that visibility of those recurring revenues.
All right. And on the operations side, do you ever get pulled in to run someone else's system that had been built up, and that like, hey, you guys are better operators, operate this third parties group, or you only operate your own facilities?
Very good question again. And we operate other people's facilities as well. So several examples of, projects that were kind of in a non-compliant status or struggling, and we were brought in to assess what's wrong, how to improve it, and then take on the operation. So absolutely, we do both.
Okay, thank you.
Mm-hmm. So talking about our intellectual property, that's purely BQE's, that really sets us apart from others in the space, deals with 4 types of contaminants and sort of areas of importance to the industry. One deals with metals, and metals from the point of view of environmental compliance but also in terms of recovery, where we could selectively recover metals of value from wastewater. Second area is sulfate. Third area is cyanide recycle and destruction. That's in the precious metals mining sector. And finally, the most recent addition to this is selenium, our selenium technology that meets the requirements of the most stringent regulations that are out there in the US and Canada.
With sorry, I'm going to interrupt again. On the cyanide, the SART, you say you've got in brackets are open source. Does that mean you're using sort of open source technology to do it, just implementing it, or what do you mean by that?
Yeah, so unlike with the three other buckets where we have patents, the SART technology is public domain technology. However, we have, I guess, built-in unique IP that we developed over the years. And I just want to, highlight that, let's say, since SART really became commercial technology, and that was still relatively recently. I mean, we're talking 2005, 2006 time frame. There has been maybe 10 projects, SART projects around the world, and we were the lead on either design and or commissioning and implementation on 7 of them. So, 7 out of 10 really, and the fact that we're involved in the commissioning and operations of these things, not just the design of it, provides us with unique insight into the actual process implementation on an industrial scale. So, some people may do a paper study and size equipment, but certainly as far as how to run it, how to make it successful on the industrial scale, that's our unique know-how. And I would say that it's also a natural extension of our metals IP capabilities, because as part of the SART process, we utilize that IP. So the SART process, without getting into details, is basically two main components, and one of them deals with metals. And that is a direct extension of our metals IP. So there's no patents on the cyanide recycling side. The technology as such is open source or public domain, but we have certainly developed IP in that area in the form of, I guess, trade secrets, if you will, through the implementation and are the leaders in the recycling space. And I should also add that in addition to the recycling, we also now do the cyanide destruction part as well.
With I presume these water treatment systems that they could, and you even said that the metals recovery can go hand in hand with the SART, and I presume they've got some membrane maybe technology, and like you produce the entire water or engineer and operate the entire water system, where there's some off-the-shelf components, and these are your sort of specialty parts that you add to it, but there's a whole bundle of stuff you put together.
Yeah, that's correct. So we basically design the entire treatment system, and we guarantee the performance of the system, but the system is composed of different pieces of equipment and components that we source from different vendors and fabricators. We're not a vendor or fabricator. We help our clients to put it together in a cost-effective manner. I'll talk about the services later on, but our core expertise is the design of the treatment system, the process side of it, automation of it, that's directly linked to the production of clean water. We don't have any vested interest in supplying one type of pump or membrane over another. It's whatever meets the requirements of the treatment process.
Gotcha. And then going back to the metals of biosulfide and chem sulfide, that is an additional extraction process where in process of cleaning the water, you're actually getting out trace elements of maybe copper or gold or other metals out of there that has recovery value is well on it, as well as keeping the water cleaner and not sort of leaching out into the environment. So that's another kind of revenue source as well?
Yes, historically it has been, and we have plans that are still contributing recurring revenue to us in the form of, sales, metal, recovered metal sales. But in our business model, we're transitioning away from being paid in the commodity that we recover to being paid for the clean water that we produce. And there's several reasons for it. One is that we really want to be aligned with the interest of our clients. And, in the mining industry, the notion is, okay, even if the metals are contained in waste, it's their metal. And so we have several projects where we just basically recover the metal and give it back to the mining company. Without asking them to give us, portion of the value of the metal that we recover, but we ask them, or our business model is to charge for the clean water that we produce in the process. So the metal is theirs, but they have to pay us for the value of the clean water. And the other part, of course, is that this shields us from the fluctuations in the metal prices. So we had several projects in the past business model where suddenly metal prices changed, and the operations were no longer profitable because metal prices were low. And so again, from the financial standpoint, we want to be seeking opportunities that are long-term, robust, and shield us away from what the metal prices and cycles in the industry might be, and really align us with the interests of our clients, which is to produce clean water and give them the metal. They're the best at marketing and selling it themselves.
Right.
Okay. We also have several areas of future growth in new IP areas, in particular nitrogen species and arsenic stabilization. So those are actually currently in development, just to demonstrate that we continually innovate. Now, just wanted to highlight here that the monetization of the IP that we have is primarily in the form of the recurring revenue. So the consulting services, we provide those services on commercially competitive rates, but it's consulting. Ultimately, all of the consulting is really leading to the generation of new recurring revenue, which is really the form of monetization of the intellectual property that we bring. And I think the key point here is that our IP allows us to ensure minimal competition. So we don't, the market is very large, and we don't chase every project. We don't really engage in competitive bidding. Our business development is focused on identifying opportunities where the value of our intellectual property brings unique value to the client that they can't get anywhere else. And yes, that may reduce the size of the overall pie, but it focuses us on the segment of the market where we really can protect our margin and we bring unique value to our clients. And as far as the recurring revenue goes, again, this is not based on how many man hours, how many people we have running around on shift. It's really based on the volume of clean water that's being produced for reuse or discharge into the environment. And it's multiple components of that value of clean water. You can just imagine for a mining company, compliance obviously is absolutely key. You can imagine that if you can't treat water, you can't discharge. Sometimes they get into a situation where they have to stop production due to disruptions. So having well-operated treatment plan reduces risks to them. Also, if they get us involved in projects early, we can definitely accelerate permitting process for them. I think regulators in general really like the fact that the person who's designing the plant's also going to be there operating it. So they see us operating as another way of reducing risks overall. And, as far as generating value for companies, if we apply our system, some of the value that we generate could be through reduced bonding, bonding financial security that companies have to post before they start developing the project. If we can reduce that bonding, it's very tangible upfront cash that doesn't sit in an account and can be deployed by our clients in more productive activities related to the development of the mines. And finally, things are changing, and financiers of mining projects look for environmentally responsible and sustainable management of water. And so those projects are rewarded with improved financing terms. And again, we can play a role there and create value for our clients. Now, getting into drivers for our growth in our addressable mining market, there are two primary drivers. One is really related to the increasing regulatory oversight and the need and the increased interest in making all mining projects socially responsible. That is a driver that's been there for years, and the trend continues. The regulations are not getting lighter, they're only getting more stringent. A good example of that certainly would be selenium, where there were no regulations around selenium 15 years ago. It's only over the last 7 or 8 years that the regulations have been put in place and are enforced. So those are creating new, and I guess if this trend continues, you can imagine that creates a larger pie, so to speak, for our business. And of course, the second part is the growing demand for metals to decarbonize the world. Obviously, everybody thinks of mining as being very cyclical, and that's true. But overall, the production of commodities is increasing with the total GDP, global GDP, and development of economies around the world. So, that production of commodities, if it continues to supply the rest of the world, certainly for decarbonization, batteries and solar panels and electric cars and whatever, that will certainly demand more and more mining projects, and therefore increasing the size of the pie. On this slide, I'm trying to sort of explain or give you example of the average revenue that we generate from a project. And I say it's an average project, right? There are projects that would generate more than this and generate less than this, but on average, we're looking at it roughly $26 million generated over 30 years from a project that would, in the initial 5 years, create about 1.5 million in consulting services, then go into operations that would, give or take, generate 1.5 million a year for 15 years, and then go into closure, generating about 200,000 a year for 10 years. So this gives you the picture that we actually play in all of those stages of life cycle of mines that I mentioned earlier, and tell you that the majority of our revenue comes, or the monetization of our IP comes from the operations and production of clean water during the 15 years of operation. And although this is an average project, these are real numbers. This is not something that we made up. This is actually from our real projects. Now, in the bottom of the slide, I say if we assume that we do four projects annually for 20 years, so that would be 80 projects. And based on the number that I shared with you earlier, that's still less than 0.2% of the global market. So this tells you we're not a Walmart of mine water treatment. We are specialists with certain unique IP that plays in a segment of the overall mine water market that creates really good return and margins for us. And we're not really after market share, despite our growth. We have a long way to go to talk about being a majority player in the space. Anyway, looking over the 20 years, 4 projects a year, you're looking at about $2 billion a year, $2 billion over 20 years of revenue.
David, I'd like to pull apart this slide a little bit. So in the development and permitting stage of the project, that is sort of classic engineering revenue. You get, could you walk us through the process? Like a mine comes up to you and they say, hey, we're developing this mine project. And I guess initially you do some preliminary sort of maps and ideas and plans. And as it goes through, you get more detail. Can you just walk us through that? And that's kind of a bill per hour, kind of a typical sort of service type business revenue margin setup?
Yeah, certainly. So yeah, during the early stages, quite often, so the client comes to us and they're just thinking about, okay, we're going to do preliminary economic evaluation, or PEA, they call it. But we really need to make sure that we include realistic concepts, at least concepts around mine water management and treatment. And that would include, costs. Also, what do we do about residues? How do we manage them? So conceptually prepare a plan of management and treatment of water. That would then follow into 43-101 quite often, those estimates. And then it goes into permitting. In some stages, in some cases, there is water treatment required as part of exploration. So if you have an underground, if you have drilling into formations that are generating water, so you drill, or you need to create an adit to access the ore body. You suddenly start seeing, water that becomes contaminated. You haven't produced anything yet, and you're not going to be producing for years, but you already have contaminated water. So sometimes our services include treatment of that water in the early stages. But certainly, as it goes through permitting, you need to define the treatment system, design it, quite often lab test, pilot test, to demonstrate, to submit results to the regulators, and that's quite often shared with the local communities, to basically present the case that whatever your plan is, it's technically sound, the effluent limits are achievable, and the treatment has really been thought through sufficiently so that the bonding, the financial security, and the assessment of potential liability is done correctly. So that's this 1.5 million, give or take. And sometimes, that number is much larger. On other projects, it's much smaller. I can tell you that the very initial assessment may start with a $15,000 contract. But then, we get into a $1 million pilot demonstration, and $500,000 design, that sort of thing.
And just to be, when you're building, or when the water facility treatment systems get built, that the cost of the pumps and that doesn't run through your income statement or your balance sheet or anything like that. Are you guys kind of construction managers, or there's someone you sort of give the engineering plans and make sure it's that the contractors do it properly up to code and that, but you're not managing or running that or having any of that run through your income statements?
Yeah, again, a great question, and thank you for allowing me to clarify this. Part of our business strategy that we revamped was that we really focused on the core competencies of the company. And we're not constructors. We're not civil engineers. We don't do pumps and concrete better than the mining companies do. And so it makes no sense to be trying to sell mining companies pumps and concrete, if really what we bring is the value of the treatment process. So absolutely, none of these figures include the actual capital or equipment cost of the treatment system. These are purely based on services. Yeah.
Just curious, like, let's say for the average $1.5 million of development permit, what would the typical water equipment treatment CapEx be on with that kind of engineering revenues associated with it?
Yeah, again, that varies considerably from project to project, but let's say purely treatment process equipment.
Or the and the engineers, the guys with the hammers and the like the CapEx to build one of these things.
Yeah. Well, again, the equipment I would say is somewhere between $8 and $10 million on average.
Yeah.
You have to realize that in most cases you put the equipment inside a building. The building needs foundations and blah blah blah. So when all is said and done, probably you're looking at $20 million total capex. Yeah.
Okay. All right. And now I think we've kind of dug into that side fairly well. On the operations side, the long term, the biggest chunk of the value here, you're the operators of it. You talked about you get paid by the cubic meter of water, I guess, that gets clean water that gets produced. But you guys actually have employees there working? Is it just based on per liter of water produced, or you get a base one with volume levels attached to it? Could you pull that apart a bit?
Yeah, certainly. The contract. So first of all, the recurring revenue may come in different forms. So in certain projects, we're entirely in charge of running everything as far as the operation goes. But there are situations where our recurring revenue comes from providing management of the facility, technical management, with the operators being the mine operators. So it depends on the situation. Of course, when it comes to implementing our systems, our technologies, not somebody else's, but our own, we typically end up being completely in charge because there's no one better to run the system than ourselves. In those situations, again, the contracts may vary. Some contracts we literally get paid per cubic meter of water treated. In those that meet specifications. So if we don't meet the specifications, we don't get paid. And the clients really like that performance-based model. In those situations, we always have a guaranteed minimum. So we're never exposed to, this year was too dry and there's little water. Yes, we do have, exposure to how much it rains and snows, but we always have a guaranteed minimum take or pay. So if the volume is below this minimum, we get paid for the minimum anyway. And that minimum varies from location to location. So if we're operating in a dry climate, we increase that minimum such that our revenue and financials are protected more. And but there are also, the other extreme of the spectrum is, let's say, a tiny treatment plant. Let's say somebody's producing 500 cubic meters only per day of water, not a very large amount. So the plant really, you cannot put in 4 people to run it and charge exorbitant amount of money for running it. So it's just impractical to have an operating contract for every single facility. In those cases, we provide ongoing support. Some of these facilities are staffed only part of the day, but we always have remote access. So that's one of the things that we provide to our clients as well, is the remote monitoring, and remote services where we can dial into the control system, see what's happening, adjust the process, even if nobody's at the plant, analyze data and that sort of thing, diagnose problems, 24/7 troubleshooting support for facilities where we don't have people all the time. So it's again a mixed bucket, but the projects we're talking about as the average projects are the ones where we actually have crew on the ground.
When you talk about take or pay, what happens if commodity prices go down and they shut the mine down for whatever reason? Do you have any sort of ongoing residual given your commitment to it, or do you just get locked out and your revenues stop as well?
Well, the interesting thing, Martin, is that even if the mine stops producing, they don't stop producing the dirty water. And so the mine may lay off the miners, they may stop running the metallurgical extraction facility, but they actually have to run water treatment. So I can give you an example. During COVID, one of our plants, the mine actually shut down because of COVID. So all the workers were off site. We were one of the few contractors allowed on site because they still needed to treat the contaminated water.
Okay, and let's say something goes horribly wrong, the company goes bankrupt and whatever, all sorts of bad stuff happens. You would be paid like out of the closure post-close system. You'd be paid out of the bond because they want that water clean. You'd be part of the sort of remediation process, and it would go out of the hands of the operator into the, however, I don't know, the conservatorship or however that works for post-closing. Is that correct?
Yes, that's exactly right. So all of the mining projects have a financial security that's set aside based on the assessment of the costs if suddenly something happened and the project stopped. And of course, water treatment is a big component of many of the projects with this financial security. So, I mean, there's issues with waste rock, tailings, of course, but water is always a big part of the financial security. So there's enough money set aside, at least theoretically, to continue treating that mine water. Yes.
Right. And we're dragging on a bit here. Sorry, you're doing, I'm asking a ton of questions and you're explaining it well. Could you just quickly talk, what are kind of the margins on the development, the operations, and the closure side of the business that you capture from this?
Yeah, I would say, I would like to talk about sort of blended, maybe blended gross margin, and blended gross margin over the long term, and I'll explain why. And I would say it's about 50%, somewhere between 40 and 50% anyway. And the reason why I'm talking about long-term is that you can imagine that when we're starting up a new plant, during the first 6 months or a year, we actually put in a lot more resources than would be required in the long term. As the facility gets, several years of operation under its belt, we've optimized it, we know it inside out. The intensity of our involvement that's required to continue producing the clean water diminishes over time. So, the gross margin on a startup is much smaller than what it is over 5-year, 7-year, 10-year period. Likewise, when it comes to the upfront work, those are consulting fees that kind of vary a little bit jurisdiction by jurisdiction because of the what's the market competitive rates. So I'd like to talk about the blended.
And that's roughly over the life of the project, 50%-ish.
Yeah.
All right. And just finally on this slide, if we assume 4 projects annually, how many projects are you currently doing annually? And I don't think you're doing that many. And is that sort of a forecast where you'd like to get to that kind of a level? And how long will it take you guys to get to those 4 projects annually, kind of cadence of projects?
I actually have that on following slides, so I'll get to that if I may.
Right.
Yeah. This is just to show that we have a global footprint, and we're really focusing on South and North America, and Asia. The key really markets where we believe that the metal mining and extraction is going to grow. Just a quick snapshot of the last 12 months. We've announced operation services beginning at our first selenium removal plant at a U.S. power utility to remediate an ash pond. We've been awarded two awards by the Engineering Association of BC and Canada's Clean 50 for the selenium technology. We've announced also new operations services contract for another plant to remove selenium and sulfate. Crucially, one of the announcements that I thought was really milestone-like for us, certainly in South America, is the announcements of multi-site pilot with Codelco, interested in metal recovery and sulfate removal. So there in Chile, we will have 3 different sites and pilot demonstrations there, which is absolutely huge for future business development, because Codelco is one of the largest players down there, and for any one company, a contractor, to start working with Codelco, especially a company of our size, is a huge milestone achievement. We've also announced the acquisition of the intellectual property in cyanide destruction to complement our cyanide recycle last year. So now we are actually starting to develop a pipeline of projects in cyanide destruction in the precious metal sector. And we've put into production 2 cyanide recycling plants in China that reach full production. Very quickly about our project pipeline, the purpose of showing you this is that, upper left, close to 2/3 of our projects are environmental compliance driven. Yes, there are some projects related to metal recovery. Yes, there are some projects about cyanide recycle, but over, close to 2/3 is environmental compliance driven. So again, shielded from ups and downs in the commodity price. Most of our projects are sole sourced. Again, I already mentioned that. We're not actually bidding and competing against others in most cases. And you can see in terms of technology and the actual deployment of our IP in these projects, it's quite well diversified. But I should point out that selenium, the latest edition, demonstrate how these regulations really change the size of the pie. Because like I said, 10 years ago, there was no selenium piece of the pie. Today, it's about 1/3 of our business. This pie does not show cyanide destruction. That's something we acquired last year. That's going to grow the pie. So this is just to share with you the project pipeline characteristics. Talking about financials, and this is answering your question about projects per year. So first of all, you can see that the business model that we've implemented and the business strategy is working. We've turned the business around. When Peter Gleason and I came in and took over the leadership in the company, the company was burning $3 million a year. Okay, and I think that these figures really speak for themselves, that the strategy is working, the business model is working. Now, regarding the number of projects per year, when I talk about projects per year, I'm not talking about the consulting services. I'm talking about how many projects get from the stage of the consulting to operations recurring revenue. So how many projects actually start getting into the blue bucket of operation services each year? And between 2016 and 2019, none. Okay, we had no new operations. And this strategy really started there. So, that adjusted EBITDA of 1.7 million in 2019, that did not include any recurring revenue that the company didn't have prior to us taking over. Between 2020 and 2023, we have very good visibility on basically 2 new plants going into operation each year on average in this time frame. Some of those already happened. some of them we have very good visibility and timing within the next year and a half. And on average, these would be bringing in, $500,000 per year, each one of those two plants. So an increase of 1 million a year on the EBITDA side. And then 2024 and beyond is where we really would like to get to the 4 new plants per year. So that's our target. And as I mentioned, it's a target that we believe is not only achievable, but it's maybe going to happen earlier than that because of the factors that I mentioned. The fact that our selenium technology is being adopted more rapidly. I'll talk about the cyanide recycling and the destruction that's completely new in our portfolio. Okay.
I guess you have a certain filter, like a funnel of you do so many consulting projects on the front end of preliminary pre-feasibility studies and so forth, and then that gets filtered down and so many of them turn into operating projects. Do you have a kind of a ratio, or is it that you're bidding on more, you're doing more engineering projects so the funnel's just bigger, or are you more efficient at choosing the right projects so more of those become operating projects?
Martin, you're dead on. We absolutely have to have more consulting projects than how many actually turn into operations, right? Not every one consulting job leads to an operation. So I would probably say the ratio is 5 to 1, somewhere around there, 5, 6 to 1. The other thing that I would say is it can take several years before we gain the visibility on the actual operation. So that's why this is a long runway. So when we changed the strategy in 2015, 2016 to 2019, no new plants. They were all the consulting projects that finally now, 2020 to 23, those 2 plants per year are coming from the funnel that started in 2015. You know what I mean? Yeah. So that's also the momentum. It's a snowball that continues. And this is what's really exciting about our financials, is that the past performance does not include the recurring revenue from the new projects that are just going to be coming online now.
Yeah, like all these recurring in the software world, these SaaS models, it always takes a long time for the projects to build up, but yours is especially long because of these long engineering cycles and project development cycles. But what you joined in 2015, 2016? Is that when sort of the transition really started happening?
So I've been with the company since its inception in year 2001.
Okay.
But I was hired as a manager of engineering at the time, and I actually left the company at one point, didn't agree with the business strategy anymore, and came back in mid 2014, 2014, yeah, when Peter Gleason and I kind of took over. So in the role of the CEO. So I'm a chemical engineer by background. I spent many years with the company on the technical front, developing these technologies, implementing them, but not on the business side. It's been only since 2014 that I've been in the role of the CEO and responsible for the commercial strategy.
All right, so it's been a long time in coming for this buildup of your big funnel of business to start really kicking in here. All right.
Talking about catalysts for growth, so driving us forward. One thing I want to highlight here on the left-hand side is the catalyst for growth through milestones that we achieved are in the past already. So we're not projecting that we're going to reach some milestones. We've already achieved them. And the key drivers for growth and milestones that we achieved include the commercialization of the selenium technology, the acceptance of the technology by regulators. So to the extent that we have been mentioned as one of the potential treatment methods in the draft coal mining effluent regulations that are just being released as a white paper now. And there's a huge pushback from the industry against this, federal regulation. But regardless of that pushback, Provincially, it's already regulated. Selenium is already regulated quite tightly in BC, Alberta, and certainly across the United States. And then finally, the cyanide destruction, IP acquisition. So those are all things that we have already achieved, that are the catalyst already happened, and it's in progress. We're not hoping it already happened. On the right-hand side are the market drivers that are sort of outside of our control, but you can judge for yourself what that, how impactful those might be. They include the continued trend in tightening regulations. I've been in this business for a long time. That trend has not been interrupted in any way over the last few decades. We talked about the global decarbonization and demand for green metals. We talked about ESG and the increasing importance of the social responsibility for mining projects. Everybody can make their own judgment about where the precious metal prices will be on the backdrop of the fiscal and monetary environment we're in today. And then finally, one of the new operations for us is at an ash plant in the U.S. So that's outside of the mining industry, dealing with selenium that's legacy associated with coal combustion residues. And that opportunity is I guess, only beginning for us in the power generation market. And finally, leadership team, I just have to say that, all of us here on this slide have been together for, I'd say at least 10 years or more. And so we have a very cohesive team that have been through the tough times with the company, that have been part of this turnaround. And that is so important for the company culture. As we grow, managing the growth, managing the culture in the business, we have a very good team that's been together through, like I said, the difficult times, and well equipped to oversee and manage the company growth moving forward. And a young team too, a lot of these team members, they'll be around for longer than I will be. And so as far as continuity and succession planning, that's huge part of our strategy to, within the company, have succession plans that will ensure continuity. I think the final slide here is just to show you that, as we continue on this path of turnaround and growing the business, our treasury is growing. So our working capital is building up, and it's partly because, of course, we're successful with our strategy, but also because we don't need to reinvest large amounts of money into our own business. We're not, again, a company that would invest in its own R&D to a large extent. We do a little bit, but most of our R&D is industry funded. And of course, we're growing. We have to invest into our people, but we're not investing into equipment, into tangible assets that are subject to amortization. So the cash is building up in the treasury, and certainly as we get more and more visibility about our recurring revenues moving forward, we started talking about potential dividends. That's it.
That's great, David. We have a couple of questions here from the audience. Firstly, could you just, on the selenium and the U.S. coal ash ponds, could you talk about that opportunity and how near term that could make an impact on your business?
So there's two components to it. One is selenium, the other one is the ash ponds. So selenium is a metal that's ubiquitous, present in trace quantities in basically minerals that are present in formations. Doesn't matter if it's a coal mine, precious metals mine, base metals mine. There are minerals that contain selenium very often. So it's a trace element that's ubiquitous in the mining sector. Because it was present in coal fields as well, and then the coal was shipped to coal-fired power plants to generate electricity, the residue of combustion contains selenium. Not always, not everywhere, but there are coal combustion residue that contain traces of selenium. Those residues have been stored in ponds, ash ponds, for many years. And now that the utilities are really sort of forward-looking, looking at minimizing their liabilities moving forward, even when they start burning coal, they will still have to deal with the closure of these ash ponds that I would basically say is very similar to tailings ponds, right? So the ash ponds are tailings ponds of power generation. And these have to be cleaned up. So, you know, that sector is just now starting to be active, and there are certainly, you know, hundreds or thousands of ash ponds all across the United States. Again, not everyone has a selenium pond, but the fact that our technology can be deployed in a, you know, a mobile or portable way allows us to really look at solutions that may, you know, if you have a cleanup that takes a couple of years and then you move the plant somewhere else where it operates for another 2 years, and et cetera, and these ponds may be in clusters geographically around power plants, that may give us an advantage. Now, we certainly are currently working on proposals for new ash pond cleanups. So the first one that's running really gave us the springboard to work on more. And you know, the power generation market is very consolidated. You know, the utilities are not that many, more consolidated than the mining sector. So in terms of business development, if we do a good job and we are successful in the first few projects, then, you know, the business development is going to be easy. Because, like I said, the consolidation, it's not like we're going to be dealing in a sector with 200, 300 different power generators in the US. That's not the case. So having good reputation with one client opens doors to the other utilities in the US.
And am I fair? I'm assuming that the ash ponds are pretty consistent, where you don't have to re-engineer whole new systems for a different ash pond as much as you would in a mining system. So once you get a basic setup, you can kind of like stamp out duplicates of those or use the same system on different ash ponds?
Yeah, I think that's largely true. There still might be differences. And, you know, although the ash ponds may be, you know, very similar in terms of water quality, the receiving environment, the end of pipe limits may vary from site to site, depending on the receiving environment. So there may be some differences, but I can tell you that certainly the proposals we're working on right now are, I'm not going to say cookie cutter, but it's largely replicating already what we've applied at the first site. Yes.
Right. Someone's asking here, you say in your previously, you could get up to 4 projects a year by 2023, maybe even earlier. Is there any visibility to getting beyond 4 projects a year, or is that getting a little ahead of ourselves here?
Yeah, I think, you know, our greatest challenge right now is managing our growth. And we think that getting, you know, being able to execute with high quality, delivering high quality service to our clients, getting to 4 projects a year is realistic, and absolutely includes substantial growth. You know, going from 2 to 4, we're doubling, and you know, understanding that this is related to people and growing the business. You know, also the satellite operations with each new plant, you know, you may be in different states, different provinces, remote sites. So the logistics and the management of the human resources is really the critical element here. and maintaining the culture in the company. So getting beyond the 4 year would be an upside, but we feel we really need to be careful how we manage our growth.
Yeah, I could see the complexity beyond that could get a lot more. How many employees do you currently have?
So we have full-time and part-time, because some of our operations are seasonal. So currently the full-time staff is, I think, between 50 and 60, because we have some that are specifically for these Codelco projects in Chile as well. And then with the seasonal operators, we're probably around 70, 75. Yeah.
You use a lot of sort of contract engineers, they're good, reliable guys, and you sort of bring them in on a project and then let them go, and then they come back a year later or so?
You mean engineers, like engineering companies that we work with, or
just like to help sort of the ebbs and flows of the business? You got an extra project. We know some good guys. We'll get them in on a couple of projects here. Maybe they'll turn into full time, but maybe it's sort of more engineering gig work.
Not so far, because again, it's about the core expertise, and we're not outsourcing our core expertise. It's all in-house. We're not bringing people on gigs, but we work with engineers who do pipes and electrical cables and foundations, and absolutely those would be either engineering companies, and I should mention several that are really good partners with us, like Black & Veatch, again, a very reputable company in the power generation market, but also in mining, and smaller outfits for smaller projects that we bring in as needed. But as far as our core expertise in design and automation of these treatment processes, we don't really do contracting. Yeah.
All right, we've got a couple of questions here kind of on the share structure and sort of the stock end of things. There's someone asking about dividends. You mentioned that earlier. Normally with sort of sub $100 million market cap companies don't really, people are getting ahead of themselves on the dividend front, but looking how you're building out your CapEx needs and stuff, that seems actually very plausible at this point. You mentioned it. Any thoughts on what size you need to get to, or how that could maybe look like?
Yeah, so I think there are two aspects to the dividend. One is getting confidence and visibility of the recurring revenue. So once you have the plants operating for a certain period of time, generating predictable, reliable recurring revenue from each plant, it gives you confidence in paying out dividends. And the second aspect is we want to maintain certain minimum cash reserve, in our treasury to withstand any sort of ups and downs in the industry and in the market. So based on what we assume historically, somewhere between $3.5 to $4 million a year, roughly 1 year worth of our run costs is what we wanted to have as a reserve in our treasury, and we're just about there. And with these new plants coming online, we're also going to gain more visibility. So we don't want to start paying dividends prematurely, but once these plants predictably generate recurring revenue for 6 months a year, then honestly, we're not putting the cash into buying equipment or anything like that. So absolutely, at that point, we have predictable recurring revenue and sufficient treasury to withstand any sudden upset in the market. It makes sense to consider dividends.
So probably not a 2022 event, but possibly something in 2023 or thereabouts that could make sense then.
I think we'll revisit that probably by the end of third quarter here this year. Yeah.
All right. Could you talk about, someone's asking about institutional investors in the firm, any sort of, and as well, someone's asking about insider ownership, buying and selling. Any comments on that?
Yeah, so as far as institutions, we don't currently have any institutional holders. Historically, the company had institutional holders primarily in Europe, But after the financial crisis, they all exited. So we don't currently have any institutional holders. As far as the insiders, yes, there is a significant component of the company's shares that is being held by insiders and major shareholders. I think that, as far as the management of the company goes, we probably have somewhere between 10 and 14% of the company. As far as insider trading goes, the only time that I'm aware that either myself or others from the management group have sold some shares is when, we exercised options, and because of our tax requirements in Canada, we're basically trying to pay some of the taxes through the exercise for the exercise of options. So if somebody sees that I sold 300 shares, they should also look at how many thousands of options I exercised and I'm holding currently.
All right. And I'm going to ask you, this is coming from me, a bit of a cute or maybe a jerk of a question here. You're at $26 a share price. You got 1.2 million shares out. Any thoughts on a share split or anything like that?
Yeah. Again, basically, at the end of the day, we would like people, if there are new investors and or institutions who want to come in and get to a certain percentage of ownership in the business, it doesn't matter where we're split 4-1 or whether we have 10 million or 100 million shares. They can assume a certain portion in the business. So there's no immediate plans for reverse split, but you bring up a good point. At some stage it may actually make sense to consider that.
Yeah. I don't know if you remember, but I when you called your rollback, I gave you a crap for that. So,
yeah.
A little too aggressive, but hey, it's working. So there we go. I think, well, we're well over an hour here, and I think you've done a great job explaining everything. So I always wrap up with this sort of news flow for the next coming 6 to 12 months. That's sort of, you're going to announce, do you announce all your sort of operating project wins, not all your engineering ones, but you announce all your operating ones? You did a small acquisitions. Is M&A at all in the pipeline? Maybe some sort of tuck-ins with some good sort of aqua hires, I'm thinking possibly.
Yeah, so you're absolutely right. We don't announce every engineering contract or every consulting job, but we certainly have a number of announcements lined up for significant contracts, both on the consulting and the operations side. That people should look out for the rest of the year. Obviously, we have our year end coming up. I believe that's the third week in April. We're announcing our 2021 year end. And then in May, we have the first quarter of 2022. Again, we kind of expect our performance to continue on the trajectory that I presented. People should look at it. There will be announcements also on the ESG side. So as we're working with local communities, we're trying to form partnerships to even strengthen the bond we have with these projects, so that it's not just about our client and the mining company, but also about the communities around the mines. So people should look out for those announcements. They will be coming out. And I think that the key here is that our announcements, we get really bad feedback about our announcements, that they are not announcing dollar value. They're not announcing quite often who we're working with. And it's very difficult, to announce names of projects and sites because of the sensitivity around the environmental component of it. And certainly the dollar value is very difficult to announce for a number of reasons. And one of them is also not trying to tip our competition about what we're charging. So, but based on this presentation, I think I gave people good idea about what to expect from our new projects.
Right, David, thank you very much for taking this time to really explain the business very well, I think. So thank you very much. It's been great to have you here, and love to get you back in a little while as the business progresses. Thank you very much.
Thank you, Martin.
Cheers.
Pleasure. Bye.